Hello everybody, it's Les. Hey, I want to wish you a quick happy holiday message here. It's a couple days before Christmas and wanted to say a couple things. First of all, thanks for your patience this year. As you know, the markets have been a little crazy and got a little more craziness to come, I think, in the first quarter. But relatively speaking, portfolios have hung in fairly well, but it's been a very unique year. With rising inflation. So inflation seems to be calming down a little bit right now, but not nearly enough for the Federal Reserve. So a lot's going to be dependent, especially in 2023, based on where inflation is headed and what the Federal Reserve might do with interest rates. But I want to highlight 5 key things that are going on in the economy right now that I think will be important in 2023, and then we will see where things lead us, and I'll do a more detailed video after the first of the year as well. Trend number 1, I just mentioned rising interest rates. Inflation still very high. Last reading was around 7%. Economically speaking, rates cannot continue to go and rise at that. Prices can't continue to rise at that kind of pace. That would not be good for us long term. So Federal Reserve very committed to getting those numbers down. I think next year, early in the year, we'll see a few more interest rate increases from the Federal Reserve, and then hopefully things might level out a little bit. It'll depend on what the spending data shows us over the next 3 or 4 months. Number 2 trend for next year is that we'll see what we call broader leadership across stocks. And what that means is in the last really 10 to 13 years, a lot of our stock market gains have come from the technology sector, the communications services sector, consumer discretionary, your Amazons of the world. A lot of those stocks, as you're well aware, did extremely well over that time period. We had great returns in 2019, 2020, even with COVID, after the rebound, and even in 2021. But that party came to a halt this year, needless to say. So a lot of your technology holdings are down quite a bit. A lot of the COVID stocks like the Zooms of the world and the DoorDashes and things like that, Peloton, we've seen some pretty significant declines. So going forward, and we've seen it this year some too, especially next year, is what we call physical leadership, not digital leadership. So in other words, kind of the boring companies of the world, the Caterpillars, the Procter & Gamble's, the Duke Energies, a lot of individual stocks that don't get a whole lot of cocktail party talk, actually have fared well this year, and we think will do very well next year. And so your returns in the stock market will come from a broader swath of the overall economy. We think that's very important. We think that's a good thing. We do think technology and those types of stocks will begin to grow again, or at least their prices should increase, but it'll be slow. A lot it's going to be dependent upon interest rates and where they head in 2023. Another important factor next year is going to be earnings growth. Companies need to make money. At the end of the day, the stock market moves up over time because companies tend to make more money over time. And during the digital era of the last 10 to 13 years, a lot of those companies weren't necessarily making a whole lot of money, but they were popular, people were excited about them, and that's what drove their prices up. But kind of the chickens have come home to roost now. Going forward, in a rising inflation, rising interest rate environment, you need companies to make real money. And that's some of the stodgier companies that I mentioned before. It's companies that pay really nice dividends, where a lot of your stock return is coming from cash payments to you on a quarterly basis, maybe even a monthly basis, and it's not all price appreciation. So those types of companies and sectors of the economy, industrials, materials, utilities, some not very exciting things, are going to lead the way, we think, in 2023 and into 2024. So that's an exciting trend, a good trend for us, we think. The last item I'll mention that's pretty significant is this idea of the global supply chain overseas coming back to more of a regional supply chain. In other words, our sources of components to make things in this country are going to come closer to home and that's already started. And of course, that was driven a lot by COVID. We'll see that trend continue in this country in 2023. I think you'll see more manufacturing come back. We'll be building more facilities for alternative energy sources And that's going to help drive some of those boring parts of the economy. If you're in the construction business or the materials business, those types of companies we think will continue to do very well based on these supply chains coming back. So those are some larger trends that we can look forward to in 2023. Today, all of the experts are saying, hey, next year could be flat, might be up 10%, could be down 10%, but we're certainly not shooting the lights out next year. We can't see a scenario where that happens. Other than if inflation really does start to come down, maybe we get a mild recession, prices really start to drop, that could be a positive, and the economy could rebound, the stock market could rebound faster than we anticipate. Me personally, I'll just say that I think the biggest issue is our labor force. We've run out of workers, to be honest, and that's keeping labor wages high. So if you're workers, you're making more money than you ever have, which is a good thing. But we're also going to see that in terms of inflation and the goods and services that we purchase. So for that reason, I don't think inflation is going to come back down to 2% like the Fed would want. I think it could settle more at 4%, but we will see, because all of the experts at the beginning of 2022 thought we were going to have a great stock market year, and we see how that turned out. And that's the nature of investing, right? It's very uncertain. Don't really know what's going to happen. We just make the best moves that we can based on the information that we're given. So hope everybody has a great holiday, happy new year, and then we will see you here shortly in 2023. Looking forward to a more fruitful stock market and bond market next year. Everybody take care. Thanks.